welcome to SFI Not So Live with me, Jay Evans. I'm joined by a panel of gents today, all of whom are from Saffron Building Society, but all will become apparent as we go through this podcast as why all the gentlemen are here. Just before, I'll do the caveats first. Just a few caveats from us. We do talk about news topics that are in the specialist media and the mainstream media, and the opinions that we give out over this podcast are our own and not necessarily that of our employers. We're recording at the end of January 2024, so some of the things we discuss may be slightly out of date by the time you listen. Boring but done. Let's go around the room and say hello to everyone. Tony, welcome.
Yes, thanks, Jay. Welcome, everybody. My name is Tony Hall. I'm the Head of Business Development here at Saffron, and this is the first time I get to change my description of what I do, because I'm delighted to say that I've now got an enlarged role, and outside of helping all intermediaries with everything to do with residential and buy-to-let, I'm now responsible for supporting our developers who are building homes for other people to live in. So providing that full opportunity now. So really excited to work with brokers and developers to build the houses we need to. Good
stuff. Well, we've got more topics that we can discuss on the podcast, so that makes us all very happy, I'm sure. And regular again to the podcast, Phil, good morning to you. How are you?
Hi, Jay. Very well, thank you. Hello, everyone. So I'm Phil Lawford. I'm the National Account Manager at Saffron for Intermediaries, and I look after our key broker and intermediary relationships.
Thanks, Phil. And we're welcoming back someone who hasn't been with us for a little while, Lee Williams. Hello, Lee. How are you doing?
Hello. I'm good, thank you. You?
Yeah, I'm good, thank you. Just a brief description for those that might have not have heard you on your previous podcasts.
Yeah, so I'm Lee Williams, Business Development Manager, looking after the Southwest and the South Coast. So I work very closely with my broker partners to maximise the opportunities that our proposition provides them, their business and their customers.
Wonderful. Brilliant stuff. Well, I should really go on to explain why all three of you are here, because I think the stories also relate to what I'm about to talk about. For any brokers listening who have read the mortgage press over the last certainly couple of weeks, will have noticed a slight shift in the way that Saffron and I would say other lenders are talking. And we've had a volatile mortgage market, and we've had lots of changes in the industry. And Tony, I'm going to come to you first on this, but we're kind of changing, moving around the categories of building size to a degree and talking about complex lending. Do you want to give the brokers a bit of an introduction to complex lending, what it means and what you're trying to achieve? Because I think it'd be better coming from you than it would be from me.
Yeah, thanks. Look, it's, we've got generally two descriptors in the mortgage market at the moment. You've got mainstream or high street. Everybody kind of knows what that is. And then you've got specialist lending. And specialist lending grew out of a kind of classification probably some 15 years ago or so. And specialist lending is where everybody that's not mainstream is categorized under. However, not all of us are really what's classified as specialist lenders. If you ask brokers, and we have done this extensively recently, we get the feedback that specialists is all about it's not all about complex. There you go. That's the thing. It's not about. It's about bridging and seconds and kind of adverse lending, which all are very, very relevant markets for the right customers. But it's not our market as a building society and what we do. So we're all about complex lending. So that is anything really that the high street or the mainstream lenders don't wish to spend their time looking at. It might be multiple income sources, it might be property construction. It's just anything that doesn't really meet the model. But we're not specialist. We are complex. So we're on this mission to try and redefine a space in the market to make it really clear for brokers who they need to speak to, mainstream, complex, or specialist.
Okay, I think that was pretty explanatory. I presume this is born out of a need to sort of have a better description of what you do. I guess, I mean, anyone that's followed us when we did the SFI Live webinar series and even follows this podcast where we've talked about criteria change, I think, Tony, it's fair to say you are naturally leading this change and shifting categories. So will other lenders follow suit? Are there other lenders like Saffron who will also fall into this category?
Look, I think you'll see more and more, if I'm honest. We are in that group of building societies that all have, through their structure of how they conduct their business, lend themselves to be really useful for complex lending, because it's all about the signature underwrite, the personalised underwriting, the support you get. So we're just one of that group, and I know of a number that, when I've mentioned this industry events recently, have gone, oh yeah, that makes absolute sense. So, and we, Phil and Lee and everybody else, have spoken to our distributors as well and explained this, and they're all nodding as well, which I'm sure Phil or Lee can give you some support on. So there's a real need to do this. And I think there's also, what you'll see is quite a few lenders who might be in the challenger bank category are also looking to how do they develop their diversification strategy to remain relevant going forward. So I think you'll see perhaps some of those creeping into the complex lending descriptor as well. So I think it's going to be an interesting year for it this year.
Okay, it's good stuff. Phil, I think Tony plugged you quite nicely there to talk about some of your partners and the reaction we've had, and what it means for them. I mean, it obviously having a better description of what Saffron do and who Saffron are, that's going to only benefit in the brokers in that respect, isn't it?
Yeah, no, absolutely. So I spend a lot of time talking to our key strategic relationships who we work a lot closer with, and they're all in agreement that there's this space. You've got like the big high street lenders that are they've got a criteria. They're probably credit score driven, very automated, and that caters for the easy business. And then at the other end of the spectrum, you've got specialist lenders who are well established and do those areas of lending that Tony mentioned earlier, the adverse seconds and bridging. They do it really, really well. And then there's this like gap in the middle of that between the high street and the specialist, and that's where I suppose complex lending needs to establish itself and be defined, because it's all of that stuff that's just not quite straightforward. And we're seeing so much more of it now. And I think some of the reasons are probably why it's more important to the broker community than ever is the year started well. It started with some optimism, which is great. We've seen rates falling, but I suppose we're not out of the woods yet. I think the year is still going to be challenging. Inflation has been really stubborn and sticky, and it's although it's coming down, we saw very recently inflation just creep up again slightly. So we're optimistic that the Bank of England will reduce the bank base rate, but my personal opinion is I don't think it'll be any time soon until they're confident that inflation is coming down. So what that means is it presents a challenge of affordability to the market. So ONS data, it's the Office of National Statistics, that a lot of lenders use that to assess affordability. So ONS data is still high because inflation's high. And a lot of lenders also use their revert to rates. That's the rate that more maturing products will go on to a stress test affordability as well. So with these affordability challenges, the remortgage opportunities are diminished. So brokers are having to do more product transfers. So from an income perspective, a broker firm might be writing the same amount of business, but earning less income. So this is where embracing new opportunities, that needs to be maximised and not filed under the too complicated to help category, because of not just us, although Saffron, we are committed to this complex space. There's lots of other, or there are other lenders there as well can help. So I think it represents a really good opportunity for brokers who are willing to look a bit deeper and look at what else is out there in the market to help them grow new business avenues.
Lee, Phil queued you up there as well. You deal with brokers day in, day out, as opposed to the other guys, probably a lot more brokers than the other two guys put together. So, yeah, talk about the brokers. What does it mean for them?
Yeah, it was almost like we planned this, wasn't
it? I know, right? Who knew?
So, I mean, from my point of view, this has already gone down to a lot of broker level, in the sense that I've been having a lot of conversations with brokers where they're seeing that there is this need for this classification. Because if you're a broker that's jumping from mainstream to specialist and potentially missing out the complex, actually, they are some fantastic outcomes for customers that are being missed. And a lot of that is down to education. It's about how to approach it. Obviously, we're keen to work, with our broker partners to help with that. But by having this classification, I think that it just really highlights the market much more than it currently is. The need is there. I mean, Phil's articulated that massively. I mean, brokers, whether they want to do it or not, the market is huge in this area and actually are providing fantastic outcomes. And whether they want to do it or actually partner with packages that can support them in this area, there is a real need as part of their business plans to have one or the other. And not having that and jumping to specialist could lead to either outcomes that could have been better potentially, or them saying, no, I can't help right now, when actually they could have helped. And ultimately, we've been talking loads and loads within the industry about client banks. If you're a broker, you need to be looking after your client bank. How do you look after your client bank? Provide them with fantastic outcomes. And ultimately, from that point of view, that's where the complex lending classification, in my opinion, is so important.
I agree. And Tony, I've got my marketing head on, but for a broker to be able to adapt their website to say, we can help with your more complex situation, it's only going to increase the flow into their business. If they could capitalize on this new category, it's a whole new section of the market and a whole load of borrowers that think they can't do anything because they only look at the mainstream, that actually do this properly. There's going to be a lot more people out there who will find your brokerage, surely.
Look, 100% of the things you don't say you do, you definitely won't get. Yeah, so it's a bit of a no-brainer. If your website doesn't explain and articulate how as a broker they can turn complexity into great outcome, then yeah, they're missing a trick. You're quite right.
Oh. Okay, so we're going to move on then. So I have picked the stories today that we're going to talk about because they are products that relate to complex lending and actually talk about situations that are relative and some of the markets that you would sort of consider to be complex. So let's jump to the first one. And just a caveat here, this is more of an opinion piece than an article. So I want to caveat that right from the start. It's from... Mortgage Introducer. And the title is Why Lenders' Criteria is a Challenge for Buy-to-Let Borrowers. And I know you're going to have an opinion on this, Tony, so I wanted to put this in. It's all about ICRs, but it's overall, it's just saying that landlords have got to be aware, and we've got to work with landlords. But actually, it's a really buoyant market, and he does say that in this in an article. It doesn't, it's a flexible and buoyant market. But how your opinion on this, I guess? Do you disagree? Agree with him?
I kind of agree. Really, look, it is a challenging market. It's been a challenging market for ICR requirements since rates started rocketing up a year ago, because the simple calculation of affordability for a landlord and a lender is, do you get enough rent to cover a minimum of 125% of the loan, or 140% or 145%, depending on the lender, depending on the product. So with interest rates going up, the ability to hit that hurdle gets harder. And the only way to do that is to hike your rents which either then gets you rental voids because people can't afford to pay it, or you become too expensive to actually be a landlord because people don't want to rent from you. So he's quite right. It is a big hurdle, and it remains that way. So that's why the article talks about how lenders have started to try and not circumvent, but work within the rules, because this is all around regulation. Yeah, this isn't just lenders making this up. These are regulatory stipulations. So how do we make that work? So you saw last year a raft of lower rate, higher fee products, and they've kind of worked. And Lee will be able to give a far better summary of this, working with the brokers that he does. But that's kind of the innovation that started there. But outside of that, there's I don't know. It's interesting. The market hasn't innovated beyond that. You've got other ways to help in these scenarios for the right landlords with top slicing. So that's using income outside of their portfolio to support the ICR calculation. But that's not new innovation. It's just there. And you've got things, people are moving more towards more complicated properties, HMOs or multi-unit freehold blocks, because that's where the yield is. There's no yield in a single AST. There's no money in it. You won't beat the hurdle. So that's the challenge. But you're starting to reduce the amount of lenders that will do it. And if you're a first-time landlord, first-time borrower, first-time buyer, it starts to reduce even further in those more specific niche sections. So, but it is a good market. It is strong. Look, what is it? 20% of housing is private rental sector. We're absolutely stuffed without it.
And we talk about it all the time, don't we? We always talk about the need for it. It's not like it's an option. We need that market.
Absolutely. So it's been a bit battered over the last years with tax cuts and stamp duty hikes and XYZ. We've on record a lot said, give it a break. It needs a chance to breathe and organically grow now. And I think it will start to, but it will. There's a lot of lenders still in this space, and there's a lot of lenders solely in buy-to-let that have to innovate in order to remain relevant, which is great. We're fortunate that it's part of our overall portfolio. Mm-hmm. So we're not 100% reliant on the resilience of this market, but it is a strong one for us, particularly expat buy-to-let, which is where our kind of real key point is. But I've talked on a lot. I can see Lee nodding, not that the listeners can, so I'm going to let Lee come in via a question that you'll nicely ask him now.
Well, I was actually just going to ask him what the market was like and the broker's perspective on it and the challenges that the brokers are facing. So, Lee, I'll just cue you up with that.
I think challenges always creates opportunities as well, and it highlights more of a need to speak to a broker. So if someone's listening to this and they've got properties themselves, they're a landlord and they don't deal with a broker, I would definitely suggest that they speak to brokers, because the wealth of knowledge and experience and their proposition of having so many lenders leads to them providing potentially much better outcomes. Speaking to the brokers, it's very clear that the market is actually very strong right now. There's very busy. There's a lot of landlords that are actually just looking at how can they improve their portfolio. And then there's others that are actually looking to see, can I buy more? And I think that, like Tony said, HMOs, holiday lets are obviously those that are providing better yields, and therefore the market is changing. Landlords are looking for properties that they may not have been looking at before, to obviously make sure that they're getting those yields. But it's busy. It's a busy market, and I think that I think that the key thing with a lot of portfolio landlords is making sure their portfolio is working as well as it can for them, and moving over to a standard variable rate. 9 times out of 10, that's really impacting the rest of the portfolio performance. So therefore, finding the right option as soon as possible is really, really key. And those brokers that work really closely with their landlords are educating them all the time about what's going on in the market, what can they do to help them. I see a lot on social media about that as well, just because obviously their customers are their audience. So I think that it's a really, really it's a really important market that's been looked after very well at the moment, I would say, by brokers. And there are some lenders that are creating a little bit more initiative and innovation. I mean, I have to give a shout out to Aldermore. I think some of the stuff that they've done recently with their one application where they could look after a multiple units has gone down very, very well, and then being able to look at an increased rental based on future projected increases, that type of thing has gone down very, very well in the market, I have to say.
Great. Well, actually, I'm gonna link this to our next story a little bit, actually, because something you just said there, Lee, was the brokers really working with their landlords, and what we're seeing more of now is brokers working much more closely with the BDMs at the lenders, which actually leads us very beautifully onto this mortgage strategy piece. I'm loving the links today, guys. We're doing really well on this. And this is I love this. It's titled "What Makes a Good BDM," and it got my attention because the audience won't know, but Tony, Lee, and I got together and recorded a video for someone. Was it last week, week before? Early January, and we got together and we were filming and we were just talking, and it was, the role of the BDM. We were talking about the team, and Saffron's team's grown particularly strongly. And so I saw this and thought, this is really interesting, because this is from a sort of summary from October's Mortgage Business Expo. And I thought it was a really good chance for us, Tony, to talk about BDMs, because you have, and you say it all the time on this podcast, you say it all the time, every time I see you, you talk about the growth in your team, and it has gone, your growth has been exponential, the number of people in your team. But I also think the growth in business and how that can be attributed to the BDMs. And I think this article gave me an opportunity to come to you and say, what is in your mind, how have you grown the business through your BDMs, and what makes your BDMs as good as they are? Because you can't deny Saffron is becoming more and more known year on year on year.
Look, absolutely, and that's around the strength of our team. So we've been building the capacity of the team over the last 3 years, three and a bit years since I joined, and we've now got we've got 15 of us, which is superb considering there was 2. But it's our success is purely down to my BDM team, right? To a large degree, because we're not a rate-led lender, we're a solution-led lender, which only can be really achieved by speaking to one of us. Yeah. So that's what having that broader team and having that accessibility, either in the field, on the phone, via live chat, whoever in the team, because I've got, super experts like Lee, yeah, but we've got the whole spectrum of the guys on the phone in the office taking those reactive calls from a first-time broker or somebody that needs help, but they're as equally technically able, and that's the key for it all. Lee just adds that extra element, and that's as a BDM and his colleagues do, because that's what they do. Our business development managers are not, and this is what the article's saying, are not there to flog a product. They are there to genuinely help you grow your business, because mutually we both benefit from that. If we can, as Phil talked about, if we can help you understand how to diversify, to capture lost opportunities or lost income because the market's changed, that's the strength of a quality BDM. That's what we do every day. That's what my team do. That's why we have grown our business in the areas that we want to grow in so well, because I've got talented people out there having those conversations, either on a reactively or more and more so, more importantly, proactively. Go and help people grow their business. That's our very, very straightforward challenge. So that's why it's worked, because I've got a group of people that are genuinely nosy, genuinely want to help, and are technically able to do so. They've got my strategic objective for my team this year is to make sure that they're all viewed and seen as the go-to technical expert for complex lending in our market. And that's not because of product pricing or even criteria, because criteria can be matched, right? And product pricing can be matched. But how we do what we do is purely down to us. And that's what my team do so well. So That's the key, mate, really.
And actually, it goes back. I just said about marketing, but I think marketing and communication. Lee, I'm going to pick on you for a minute because I work in marketing. I work in social media, and I know you're a great BDM. I know you're a lovely person. You're very easy to get on with. I'm sure brokers love you. But I love your LinkedIn. Not going to lie. There's always your mug in a cartoon form, or there's something animated, or something jumping around that gets my attention. I think I can only be Lee, but. What I wanted to draw with you as a BDM, I'm not trying to blow smoke anywhere, but I do want to sort of address some of these things that this article says, like, they can't get hold of the BDMs on the phone, they don't get the support they need, don't have enough BDMs. I mean, that's because of the financial climate. But there are other ways of letting brokers know the BDMs are out there, and your use of social media is a good example, but also like you do on the spot events for brokers and things like that as well, don't you, with your BDM partner at Saffron? Maybe just talk about why you do that and how that's helping.
I think the key thing of why I do it is because I need, and I guess my drive is to make sure that as many brokers are aware of what we do and how we do it, because what we do, I'm obviously biased, is brilliant. And what we do and provides outcomes to customers with those complex scenarios where we've got that middle ground rate. We're not competing with the high street, but we're not jumping to the specialists like we were saying before. So being in the market that we're in really can be really beneficial to understand, because actually it's a really good conversation to have with customers. So my big driver is I want everybody ideally to know Saffron for intermediaries. I want them to know why we do what we do, how we do what we do, and where we fit within their business plan and their client bank. And platforms like social media, with LinkedIn, is such a good way, because my reach is much bigger than me being sat on the phone going, can I just talk to you about this? When actually they might just see me scroll it. They might when they're scrolling, and I've had phone calls off the back of that a week or two, or even a month or two later, where they go, "Oh, I've seen that you said something about CIS contractors. Can I have a chat with you about that? Because I've actually got one now on my desk, and I don't know what to do with it." And sometimes that could just be a really good educational piece about how they can be looked at and the views of being able to look at it. It might be that it leads to, that's something we can do. But I think that the key thing is any of these sorts of things or events is just spreading that word, being able to talk to brokers, because our biggest struggle as a BDM, I think anyway, is making brokers aware of what we do, updates, because they're just so busy. Their to-do lists are off the scale, especially at the moment. I'm talking to brokers and they're just constantly busy. And from that point of view, that's a really good market to be in, but equally you want to maximize every opportunity. So us having that chance to obviously be able to spread the word in multiple different platforms is really, really important.
Just for the sake of balance, if you do read the article in Mortgage Strategy, you'll see there's lots of building societies and other lenders in there talking about the BDM teams and the strengths of them. So, we might seem a little unbalanced at the moment, but there are some really good BDMs out there. And I think every lender has got their stars that stand out, and they are becoming more and more vital to brokers. But Lee, just quickly, because it's something we discussed and it's really important to bring this out, you are also valuable to a packager, because actually you are their go-to. So actually an entire bank of brokers, if you like, can have access to your skills through another sort of intermediary company.
Absolutely, and I can't say this enough, because brokers, where they look at what we do and how we the type of borrowing we do, some brokers will look at it and go, "That's not my bag. I'm not interested." They might look at a self build and go, "It's not for me." But that doesn't mean that should limit your business. So working with packagers, and I talk to packagers day in, day out. So ultimately, they've got that, whether that be direct or via a third party. But packages are key in a market like this. If you're not going to do it yourself, but you're obviously going to be advertising in that area, you've got a partner that's ready to work with you. So it's brilliant. And from a capacity point of view, it can be a fantastic resource. Mm-hmm. So yeah, I'm an absolute advocate for packages when you don't want to deal with it yourself. When you do, absolutely, you've got us. We'll work with you. Absolutely. But when you don't, and you look at the type of lending, you say, that's not really for me, I'm busy enough in other areas. Fair enough. Absolutely. I totally get it. But if that's not something you're going to grow into, at least make sure that you're able to still capture those customers, because actually those needs where they still want to deal with you, a packager would still be able to help, and effectively it's an extra resource. Brilliant.
Tony, you've got a whole bank of people now. Lee, obviously, I just picked on Lee's social media, but they're all such varied characters. What do you think makes your team stand out? What do you think it is that you think you look and think, do you know what, that's a cracking team? And is it a diversity of the characters that you've got? Is it, the fact that you've separated them around the country, or the fact you've paired them up? I mean, you won't want to explain that because I've said that twice now. But do you think there's a model, or do you think you've just naturally evolved into what you have?
No, I think I suppose, like anything in life, you tend to build something in your own image or what you like, and so for me as an individual, and I'm sure people will either be throwing stuff at their smart devices listening to this, it's all about relationships. It's all about understanding each other, but it's all about honesty and transparency. So we're not here to just make you feel great. We're here to do great things. Sometimes it will work, sometimes it won't. So that's the key. I've got a bunch of people where I say we have to conform to what our business does, right? Because you can't. I'm going to be really candid here, right? We ran a training session to help people present better for all my team, and it was a really good session. I'm sure Lee will agree, but my feedback following the first one was, with a couple of them, I didn't know I was talking about the same lender, okay, because there was a different approach, okay? So that taught us that actually we need some conformity in what we talk about, but we've got individuality in how we do it. So what I don't want is a broker having a conversation with Lee, then a conversation with Leslie or Jackie or Simon, and having a different outcome, because it shouldn't be. But how they arrive at that outcome through their own personal style is entirely up to them. That's what makes Saffron for Intermediaries BDM stand out, because it's all about individual personal style, okay? That's the key thing. The other key thing I think I just want to link to with this article is it's great that we help you grow your business from that mindset, but it's also how do we broker this relationship between you and our underwriters? And that's what is the other thing that makes a BDM really stand out, is how do they portray or help you portray your message as a broker to the decision maker? And that's where BDMs either crash and burn or excel, because they bridge that gap. And the one way that we do that, and we talk about this a lot, is our broker surgery. So that 9:30 call every day where if there's uncertainty on a deal that we think it meets our policy, but we're just not quite sure, we don't want to put you to trouble of dipping something, they go and have that conversation. But it isn't just a conversation that says, oh, we do this. They'll put together a story and a summary that explains why we should do it. Okay, because the one thing I make it really clear with my team is you shouldn't be taking something that we won't do. You should just be saying no and moving on, because that's what your broker wants. Yeah, they'll accept that you're not going to say yes to everything. And as long as you do that in a timely fashion, that's cool. But go to that meeting with a full story of having all the questions asked before that in order to help influence the decision. And that's the difference that a BDM makes. And that's what my team pretty much do most of the time. We don't always get it right, but that's the difference. So it's all about individuality, but consistency in service delivery. That's what makes us stand out. And I'm sure that if you lined all mine up, brokers would say that. They'd say lots of different things about their personality, but they'd say the same thing about their consistency, which is trusted, knowledgeable, guaranteed to help me. That's the difference.
Great. I think that pretty much sums it up. Good stuff. Okay, let's move on. For the sake of the audience, poor Phil is having internet connection issues, so can't currently join us for the podcast. We will get him back on if we can. So I'm not ignoring him. If anyone wonders, we have lost him for just a few moments. We'll try and get him back. So let's move on anyway to a property industry eye story, which is from a little time back, a couple of months back, but it caught my attention because we talk about this all the time, and it's actually a bit of a sort of delve into self-employed workers and their fear of rejection. when applying for a mortgage. I think it's really important that we look at this, mainly because we talk about it all the time. But I think this survey really does kind of give you a kind of insight into the self-employed themselves and what they're feeling, what they're thinking. Tony, being self-employed, it falls very beautifully into this new complex lending category to a degree, depending on their circumstances, doesn't it? I mean, yes, you can get a self-employed mortgage. You can get a mortgage if you're self-employed from your mainstream lenders, but actually, the more complex that self-employed income is, or the more complex their situation is, that's where you guys and other societies and lenders will step up. So just maybe talk about what some of the self-employed have faced and what you've done to address that.
So self-employed and supporting that market is a big one for us, and that's why we've grown our self-employed lending by, I think it's 750% in the last few years. Okay. And that's because we categorize our self-employed in two different ways. So we have our specialist product, which is for, I should say complex rather than specialist now, shouldn't I? So that's old habits. We have our complex product, which enables those who are recently self-employed, i.e. 1 year, which a lot of the high street or a lot of lenders don't want to see that 1 year. So that's something we've done to help people who a lot of people move to self-employment post-COVID, are coming to the end of their first year, etc., and want to get on with life and build a house, buy a house, move house, and therefore that's how we can help support them in that area, because we only require 12 months and then a projection from their accountant that shows that we can trust that 1 year is not a one-off, so to speak. But we also use that product to help those customers who have seen big jumps in their income or have some fluctuations in their income, and want to use the latest year. A lot of lenders will look at that and average out. We'll actually, if we can get comfortable, say, no, we can understand that. Your glide path's going that way. We can do with that. So that's fine. The other way is if you've got 2 years self-employment, we class you as a standard residential customer. And therefore we'll assess you, but we'll assess your income in different ways. And I'll defer to Lee so he can talk more about this in terms of how specifically we can help. But that's really it. We've provided a range of adaptable solutions to support the self-employed. That's because we recognise it's such an important part of the market. And nobody, looking at this article and the research we did via YouGov last year, 75% of the self-employed didn't think they could get a mortgage, which is just absolutely wrong. But if that's what they believe, perception's reality. So that's why we always challenge ourselves as lenders and challenging brokers. Again, what do you say about how you can help those people, how you can help the self-employed? If you're not saying it, don't expect them to realise that you can do it. So I think that's the key. But I will defer to Lee for more support on how we can really help.
Go on, Lee.
Okay, I think just following on from the perception of the market, though, obviously we did this YouGov research and it highlighted that a third of customers that took part felt that their broker did not understand them or their business well enough. And in turn, the brokers that I've been speaking to would probably say that actually the lenders don't want to know beyond the figures that they can see. And I think that's where our proposition is different. We don't want to just purely base it on the figures that we can see on the accounts. What we want to do is get to know them and their business via obviously the broker to see how we can support them with their lending. And actually, like Tony said, there's going to be situations where they are on a glide path that we can get comfortable with that other lenders potentially wouldn't be comfortable with. And that's where we can really support. It's that adaptive underwriting to understand the situation. And I completely understand where, my dad's self-employed. He's always got this preconceived idea that he would struggle to get a mortgage or it'd be tougher. This research highlighted that. But actually, in some situations, obviously there's different paperwork. I think that, again, we were talking about complex lending and this being its own classification. I think this highlights it even more so again, because if I were to say to some brokers, do you see self-employed as specialist? They would say no. But then there will be some situations where they're dealing with specialist lenders for the fact that they're self-employed. And actually, that middle ground of complex is where we could potentially get an outcome at a lower rate and actually be able to look at it in the way that they need to. So I think the classification really, really helps to understand that as well, because some brokers do say that they specialize in this area, and they will then be using the complex lending market. But there's many that would jump from high street to specialist because that's the way that they have done with, adverse and other things, and that's the way that the market is perceived. And obviously customers, the key thing there is customers want to be heard. And I think the brokers are there listening. And what's interesting with the survey is we don't know from this survey how many customers have dealt with brokers and how many have dealt direct with their bank. I would assume, personally, it's my own personal opinion, but I think that those customers have probably dealt direct with a bank rather than dealt with a broker, because I think this is where a broker really does want to, in the main, get to know what fits behind those figures. And that's why I'm such a champion for brokers.
And I couldn't agree more. Actually, I was going to bring this up because I've seen this in my own personal life with my own sister who is self-employed in exactly that. But it was down generation across peer groups. One person at some point has been rejected by the bank, and it becomes like Chinese whispers, like it's never going to happen. So they will rent and rent and rent until somebody one day says, well, I used a broker and I got one. But we shouldn't be waiting years for that poor potential purchaser to get that information. We need to get more out there. And I think there's a lot to be said for, all lenders and brokers to market out. But I think there's also, an industry-wide perception that needs to change. And I think, that we're in a situation where I think, the Chinese whispers have taken over. And so actually some of these respondents have just listened to what people have told them and thought, I'm not even going to bother looking.
Yeah, it's like that old analogy, isn't it? When they say they go down to the pub and they speak to a friend and a friend had a problem. I think I do agree. I think that's the case. But I do think that marketing, you mentioned LinkedIn, because obviously I'm an advocate of LinkedIn. I like to shout about what we do and how we do it. I think the brokers, across all social media platforms, everybody's going to have, and I've always said when marketing, it's really key to understand your audience, and you will have different audiences on different platforms, and as brokers, understanding your platforms and your audiences on those platforms could lead to you going, actually, I know that on, Facebook, TikTok, whatever it may be, I'm going to get the majority of my self-employed customers, and therefore I need to be educating them to understand I've just helped this customer who needed to consider the most recent year after a massive uplift, and this is what it meant to them. It's great marketing from something that they've already done. And let's face it, who buys? Everybody buys from listening to customer surveys. Not my wife's a classic example. She'll look at a review. She won't listen to my opinion, but she'll look at a review and go, oh, yeah, we'll get that. And I'm like, well, I might have had a different opinion, but the reviews say we should.
And not to forget case studies.
Yes. Love a case study.
Exactly. Yeah, just to plug one, there's a great one on LinkedIn today by somebody, I think, called Lee Williams.
I'm quite pleased with it, yeah.
I hadn't seen that, so it wasn't a deliberate plug.
Oh, was it not? Okay, yeah, no.
No, sorry, I hadn't seen that one.
No, perfect timing.
The point I was just going to make there, to Lee's point, is around using the Trustpilot or Smart Money People surveys as part of your business strategy, because we all buy things based on the star rating, from holidays to a pair of socks to the next Chinese meal. Yeah, we don't research anything else now, but what somebody else has said that we've never met. We don't know their values. We don't know what their ultimate aims are, and we go, that'll do for me. Mm-hmm. So as a business, again, how are you using that to get your message across to the right people? It is so important. Again, 100% of the times you don't tell somebody you do something, they will never use you. So it's really important how we support and help this market, because fear rejection is not needed for the self-employed.
And just back on, go back to case studies. one of the things that I really want to stress, and something I've been stressing to my clients for the last 20 years, is get a comment from the case study themselves, the person who purchased, the person who built, whatever. Because you put yourself in their shoes. You see a little bit of your situation and you think, oh, that's what it's means. That's where self-build and grand designs, and the people aspirations, but they see themselves. They think, I could do that. I could be this. I could be that. I've got that amount of money. I could do that. I would do that better. I could project that manage that better. It's about putting people in, they put them into the case study. They suddenly think, that's my situation. That's what I want. That's the right broker for me. And I think, marketing preach, a lot of marketing preach going on in this podcast this time.
Well, I'm not surprised, though. I honestly expected that because of the fact that we're talking about complex lending. And I think that the opportunities in complex lending are huge. And therefore, brokers and firms need to be marketing to that, to highlight, actually, I can help you. Don't worry. Just talk to me.
Yeah.
Exactly.
Well, just so brokers listening will know, it's estimated by the July 2023, 4.24 million people in the UK were self-employed. So it just shows how much that's grown. I'm a prime example. Tony will know. I'm now self-employed. I wasn't when we met. And I took the opportunity, and I much the same as everyone else has done. The pandemic probably kicked me up the butt to do something I should have done years ago. And so, yeah, let's go now. I'm going to move on because we are running very drastically out of time. Sadly, Phil still hasn't joined us. So, Phil, if you're listening, sorry, mate, but we will get you back on next month as normal. Seems to be some techie issues, like everyone's working from home on a Friday or something, isn't it? Because we're recording on a Friday. Okay, we're moving on, Tony, to something you love, and we've already brought it up actually, but I also love, and we had a little chat just before we started this podcast, and and I was thinking, actually, before I bought my house, I would have probably preferred to have built my own or a custom build. So let's move on to self-build and custom build. Tony, you can explain your credentials in this area in a minute, but what really got my attention on this survey was that 3/4 of self-builders are over 55, which I think we're missing something here because, we're older, we're aspirations, we've got a bit more money. Yes, we want to build a home or construct a home how we want it. But actually, why can't we have that aspiration and why can't we do it at a younger age, even as a first-time buyer? Is that possible?
Yeah, it's absolutely possible. It's not the markets. If you read the full report, the markets or another reports that we've sponsored recently around custom build, particularly, which is probably the opportunity for the younger builder. It's just the awareness and the engagement with this market is not seen, and that's largely through no fault, but programs like Grand Designs, yeah. Because everybody sees self-build as this huge, costly, complicated process that invariably goes wrong. Yeah. Well, that's because it's on TV, right? No one wants a project that goes to plan because that's really dull to watch, isn't it? Oh, look, their costings were bang on. It all worked on time and they're in on time. Isn't that great? Snooze fest. Let's go for the person there's no plans, runs out of money.
And it's building a 17 bedroom house on the side of a cliff. Yeah, that's the perception you get.
Building out of cabbage leaves and straw, and then there's a donkey on site. It's like that's exciting stuff, but it's not what the market's all about. So that doesn't help. The age thing is, because largely it is once you get to that position of more financial assets in your background, you can consider doing something like this. So I understand that. But to your question, yes, there's a huge opportunity for younger people to get on this ladder. And I see it particularly as one route to solving this eternal housing shortage crisis we have in the UK. For lots of reasons. One, a little known fact outside of the market, and we're trying to promote it, is self-building is the 4th largest house builder in Britain. Outside of 3 of the main building firms, self-build with its 13,000 houses a year being built is 4th. So it's a growing market, but we're way behind Europe. We're way behind the rest of the world, massively. So, as an example, I think we're at 7% of all our houses. Germany's 51%, I think, at the
Crazy, isn't
moment, of houses built but self-commissioned. So, huge opportunity for people. Custom build is probably a better way in, which is a house enabled by a developer where you get to choose the layout and lots of stuff with inside it, but you're not having the hassle of taking on the whole project and managing it yourself. So that's an easier route through, and that needs to be done. But there are a few challenges to all of this. One is that awareness piece. Two is local authorities and the right to build legislation, which is, so they all have a statutory right to provide enough housing to support the people who are signing up to their registry. As it says on here, they've got I can't remember it on here, but X amount of people signing up to the registry, the right to build registered per local authority, which tells the local authority what the demand is, what they have to then find. However, the challenge at the moment is how to get on that registry is different by local authority. So depending on the benchmarks they put in place allows you to get onto their list. So they can go, well, no one's on our list. We don't have to provide any building plots. It's because they've made it a really difficult list to get on. So there is some changes needed to building legislation in order to develop this, but it's there. And the other good thing, sorry, I'll let Lee have a word in a sec, but I'm particularly passionate about this area as being a director of NACSPA, which is the National Custom and Self-Build Association. So I'm particularly passionate about this area. The other good thing about self-build and custom build is it's greener and it's better for the local economy. Yeah, houses are built with better standards. They're built with local tradesmen, and they're largely trying to be built with local producers of local manufacturers. So they're proven to be better all round. But the planning reform needs to kind of grow out so that people can do this and there's more awareness of it. Definitely.
Lee, I'm going to come to you. We're going to use that word again, which is complex, but in a slightly different way. It's a more complex product we're going to talk about this time, as opposed to the situation. Obviously, the situation is complex too, but it's a complex product. Do you think that has sort of kept brokers away from it a little bit because they don't really understand it? They perhaps didn't have the education they needed to kind of sell it to the customers, and therefore we can't see the growth that, as Tony was saying, we really need to see and want to see in this country. Do you think there's an underlying fear of the product?
I think that is part of it. Don't get me wrong. I do think that brokers, and there's be some that will have that inquiry and be able to deal with it straight away. Some that will go, right, I've got a package, a partner that I work with, and they're going to help me with this, and they get on with it. There will be some that will say they can't do it, or they might not be able to see that it's possible. And I think that the big part of this is about obviously awareness, but also confidence. If you're wanting younger people to build their own property, whether that be custom build or self build, confidence is key. And the only way a customer is going to do that, in my opinion, is the broker giving that confidence, because a big part of it is how do they fund it, and having that confidence, having that support will lead to more and more being built. I have no doubt in my mind that would be the case. So I suppose there's one thing that I would challenge a broker that's listening to this is, if you don't have a proposition or a packager that you're working with, and you either feel like it could float your boat, you speak to us. If you feel like it might not, then speak to a packager. I'll be more than happy to tell you the packages that we work really closely with, because things like marketing and them being able to then refer it over and being able to pass it over, knowing what they do and how they do it, is massive in terms of being able to give confidence. So awareness is one thing, but them knowing that it's out there, they need to know who they can lean on, and confidence is such a big thing. And if they don't have builders that are family members and things like that they know that they can go to and speak to about it, they feel like it's a non-starter when they may have funds in the bank that they can actually do this. And the outcomes that we see from self-build is just amazing. I did a case study I just had to use this as my first case study on LinkedIn this morning, because the outcome was them building a property that they would never be able to have afforded. The end value of this property is not what they would have been able to have got. Mm-hmm. What they're putting into it, what they're borrowing, is giving them a property, a family property that is their family home, their dream family home. That would have taken loads and loads of steps to get anywhere near that. So I think it just highlights the outcome is amazing, but the broker has a big part to play. Don't get me wrong. I think absolutely, and education is key, but it doesn't need to be that you need to be, the broker needs to be there for everybody. I think it just needs to be that I know that if this inquiry comes in, I know who I can work with, and actually be able to give that support and confidence. If they do want to deal with it, absolutely, that's brilliant. But I think that's the key thing with this, is it should never lead to a dead end. And my question would be, are there times where it leads to a dead end?
Yeah, absolutely. I was just, hopefully Phil might be able to join us for the last couple of minutes, I believe. So he might come back on in a second. I was going to say something really profound, but I've just had a senior moment. I've completely forgotten what it is I was going to say.
It was that profound.
Totally. Actually, no, I've remembered now. There you go. It needed that 10 seconds of brain fog. Just talking about what Lee was saying, and one of the bit of research done by NAXPA and the National Self-Build Renovation Centre. Here's Phil, he's back. Was that in their surveys, 2/3 of surveyed people said that they didn't want to buy a house from a big builder. Yeah. However, 80% of all housing is built by big builders. So that's the challenge we have. And again, it's that engagement and that awareness, and that's why we have to help brokers. We've got a self-build guide, so that gives them every single tip as to how to help their client. And we're just bringing out a custom build one as well, because there are some slight nuances in that market. So Phil, Lee's right. It's all about having the confidence to have a go at this from a broker perspective, knowing that there's lenders there, not just us, but lots of lenders out there that can help them. And for customers, it's not as challenging as you think.
Great conversation. Tony, where can we send people to find information about Saffron Customer? I presume the Saffron for Intermediaries website is one, and then NAXPA website the other?
Yeah, definitely. There's a load of help and information on the NAXPA website. So that's worth a look. As I said, if you want to know more, speak to one of the team. They will help point you in the right direction. As I said, our guide is extremely useful and will go through step by step the whole process. Whether you use us or not, it doesn't matter. It's an educational guide that says this is how to properly structure a self-build deal for your client. These are the things to consider.
There we go. We're running out of time, but just before we go, Lee, I want to say thank you for joining us as our special guest this month. Thank you. That was really helpful, really enjoyable.
Really
and we'll have you back. We'll have you back in our brand new format. So this is February. So from March 2024, we're going in a studio. We're going to be getting rid of these technical issues that poor old Phil has suffered today with being at home. But we're going to be in a studio. The podcast will be released on all your favourite podcast channels, just as ever. But we're going to have a shave and do our hair, and maybe the women are going to do their hair and put some makeup on, whatever how it's going to be. Try not to be sexist. I might put some makeup on too. But we'll be in the studio, and it will be a visual podcast available on Spotify and available on the Saffron for Intermediaries YouTube channel every month. So we're going to get the same interaction, same format, exactly the same. But the only difference is we'll be sat opposite each other, which I think Tony and Phil, I think just really will uplift what we're doing. I mean, we've always been remote. We're a bit sort of pandemic-y still, aren't we? On the road.
It was sort of COVID webinar podcast done now, so it's all about just upping this and ensuring the quality and the interaction between ourselves and our guests is there, which the studio will definitely provide us. It's really exciting.
And Lee, Tony, and I had a little test run, but poor old Phil hasn't been in there yet. But Tony, Lee, and I had a run in there, and aside from the lengthy editing time, because it was such good quality audio and video, it actually came out in.
He's saying that we talk too much, Lee. That's what he's basically saying.
For March 2024, so we are our first video podcast. So keep an eye on Saffron for Intermediaries LinkedIn channel, Lee's channel, because he's always on it. Tony, Phil, and I will share it as well. And we'll see you on our first video podcast, which will be released on the 1st of March. So for February, it's a goodbye from me and a goodbye from the team.